Hello, it's Brian Shannon from Alpha Trends Blogspot. Today's Wednesday, the 24th of October, 2007. The market's closed. And if you like volatility, this is the right kind of market for you. And I like volatility, so this is so definitely keeping you on your toes. If I didn't know any better, and if I looked at this chart, I would think that there was a bad print in the S&P 500. But it did come down and test that 200-day moving average today after breaking below the 50-day and then rallied all the way back up and on big volume, too. So there's still definitely some buyers out there, and no one's given up on this market very easily right now just because we have a couple bad earnings reports. Just like I said about Apple 2 days ago, that Apple isn't the market. Well, neither is Broadcom or Amazon. Looking at the 10-minute time frame, you can see that this market came right up to the downtrend line. It did also toy with this 5-day moving average. You can see early on we had that weakness off the 5-day moving average from yesterday. And then it started to stabilize a little bit in here, and then a very powerful rally that took a lot of shorts, I'm sure, off guard late in the day. Now it looks like for the buyers to really regain control, and they're in a better position to do that than they have been since in the last couple days. It's really probably got to get above this level here at about 152. So ideally, I'd still like to see one more little pullback, maybe down towards 151 and a quarter, and then be able to break through. That would be the ideal way of doing it. If you look at the hourly chart, not something we always look at, but something I like to point out when I see it develop is when we see a divergence between the MACD, and that's this oscillator on the bottom right here. When the MACD makes a higher low and the price action makes a lower low. Let me say that again because I'm not sure if I said it right. But when the MACD is showing higher lows at the same time the price action is showing lower lows, that's often a sign that there's a reversal at hand, that the emotional extremes in the market have been reached, and it's pretty much due for a reversal. I've got a video on my site about the MACD if you're unfamiliar and how I look at those divergences. But that's a pretty good sign a lot of times that the market may be ready to turn course. So keep an eye on that. And again, if that 5-day move, if we can pull back just a little bit deeper, and then the market is able to rally up and push back above that downtrend line, then the 152 level, then I think the shorts could get squeezed in here. Look at the intraday action on the 1-minute time frame. We had a declining VWAP. In that VWAP offered resistance midday, and then when the market came back above it with volume too, you see that it held above it with a low volume pullback, and then the volume increased once again on this rally, a little slowdown right in here, and then big volume once again. Just the opposite of what we actually saw in the morning. So we had a real opportunity for longs and shorts in here today. Again, this low volume rally which failed, and then the sellers came in. So overall, it's looking kind of neutral on the daily time frame. We've got the 10 and 20-day moving average crossing. We're at this prior level of resistance, and it seems as though we may get some further bounce in here because we probably sucked a lot of shorts in. Getting above 152 is going to be the key to that, I think, and holding above 152 for, let's say a half hour or so. The semiconductors, these guys were down real hard intraday. They were down 5%, and I posted a video about them right over in here saying that, just basically be very defensive, be careful on this market because these semiconductors are really just getting hit very hard. Now, we've still got those levels of resistance up at 480, then about 495, and 510 or so. So this market on the weekly time frame is breaking down. It's below its 10, 20, 30, and 40-week moving averages. Not a good sign, but possibly coming into this support and testing these levels. So maybe we've got some emotional selling in there. I think there are a couple more semiconductor stocks reporting after the close today. We've also got earnings from Advent Software, Akamai, Express Scripts, F5, Nutrisystems, Pulte Home. So there's still going to be a lot of volatility in this market based on earnings. Like I said yesterday, it's more of a stock picker's market unless you're an active trader. If you're an active trader, again, there's been some great opportunities. The IWM was down 67 cents, but the real story here also was the comeback in this market. Market, still holds that $80 level on a closing basis, and that's important to see. after this shakeout over here. We've got bigger volume once again today. Looking at a 10-minute time frame, you can see same thing in here. We've got this downtrend line. We've got that 5-day moving average. Yesterday I said I was kind of more neutral on this market than anything. I still think that you want to be basically more neutral until it can clear probably 81.45 or so. I think that would probably put the buyers back in control. Maybe we could see a little bit further upside in here. This market didn't make a lower low the way the S&P 500 did. It made a higher low today. So that's good to see is in terms of there's strength in that market. So the Qs, the Nasdaq 100. I mean, just look at this daily, or I'm sorry, this 30-minute time frame. It's just a mess here the last 2 weeks. A lot of volatility here. A lot of mixed messages. We had that breakout yesterday. It looked like maybe that failed move was going to lead to a fast move. I put out an intraday chart. Actually, and this is it right here. I guess I left these on there. But I was saying basically breaking below 52.90, we could see another leg lower. And we did see that other leg lower after the market tested the daily VWAP. But again, this is a trader's market. You've got to look at, the market rallied on increasing volume and then pulled back just below that VWAP on diminishing volume. Then we saw these thrusts higher on increasing volume. So intraday, things can change quickly, and maybe I shouldn't have put that video out midday, but it was something I was looking at for a potential short trade. Initially, that 5-day moving average did act as resistance. Then it broke back above there. If you're going to be trading short in a market where the primary trend, which is represented on the daily time frame, if that trend is still higher, you've got to be very careful and make sure that you keep your short-term you keep your short trades, that is, to the short term, because reversals can happen very quickly on these shorter term time frames, and they're going to fall in line with the longer term trends. If you're not prepared for it, then you shouldn't be selling short. You shouldn't be trading that aggressively.